So if you're wondering, why do I have to sell rates that seem high? Or why am I only paid a certain amount when it feels like I'm selling much higher rates and margins than other people? You're on the right call. We're going to talk about that and fix that problem today. So if you work in an organization where you cannot see the corporate margin, you cannot see corporate profitability, you don't have transparency into capital markets, then that is not a transparent model. They can give you a P&L, but it's not really helpful. Same thing in the broker world. In the broker world, you could be sending your loans to different wholesalers, but you don't know what their margins are. And their margins fluctuate because they're capitalistic, some of them publicly traded companies that need to earn revenue. So one thing I will tell you is that if you are in a P&L model or even a broker model, if you ever ask your company for a price exception and they grant it to you, that should be a red flag. Because in this economic model that I will show you today and help you understand, you should never have to ask for a price exception. You should be able to take one whenever you want because you fully understand the economics, you understand the impact, getting 700 basis point price exceptions. And I kept getting curious and I was like, what is going on here? Like, why is this happening? I can't wrap my head around why in 2018, when margins compressed, I was called and said, hey, margin compression's here. We're going to have to really crack down, or we're going to pay you less, and so on and so forth. That seems fair. It seems like when times are tough, we should all tighten the belt. But then in 2020, when margins expanded, I figured, well, at this point, if margins are expanding, I should probably get a phone call saying, well, now we're going to pay you more. That phone call never happened. And so that was for me an opportunity to say, what's happening here? What's really going on? And so myself, and there were about three or four others of us at different organizations. This was not one company. We knew a lot of mortgage company owners in 2020. And we just asked, we said, hey, look at the rates we're selling and please tell us the margins. There were 600 basis points in our conventional margins. There were 1,100 basis points in our government margins. And we were getting the same amount on every single loan, same amount that we were in 2018, 2019, 2020, so on and so forth. And when I realized this, I said, hey, this doesn't seem equitable. And they just said, look, that's our business model. And it was that moment where I said, okay, well, they see me as an employee, not as a business partner. And I said, oh, this is happening to me. It's happening to everyone. And then it was happening in the broker space as well. All the wholesalers had raised their margins. Now, they didn't raise them as egregiously because they still had to play in a more open competitive market, but they were probably making 400-ish basis points on conventional and maybe 700 on government. And again, every one of the brokers was getting the same amount on every single loan. And so when you see these massive spikes in mortgage companies' profitability, it is largely due to the fact that when margins compress, everybody feels that. But when margins expand, all of that upside variable revenue, it goes to the company, whether it's the wholesale company or the retail company, but it never goes to the originator other than just doing more deals in a lowering rate environment. I just couldn't wrap my head around, like, if I have to give up revenue in hard times, which I understand, I should be able to benefit in abundant times. And that's just not true in the modern mortgage space as we know it today.